Hey everyone, we're just gonna wait for a couple more minutes, just in case if anyone wants to log in. Okay, so perfect. So, hey everyone, my name is Tiet Lee. I'm a mortgage agent serving clients all over Ontario for their mortgage needs. Welcome to my first time home buyer webinar. This is where we help you prepare to buy your first home with confidence. So now I'm gonna share screen with you. Give me a moment. Okay. Sorry about that. Okay. Okay, perfect. So before we dive in, actually, let me check to see. Okay, perfect. Perfect. Okay. So there are 3 important questions you should know when buying your first home. So number 1 reason is, are you ready to buy your first home? Are you saving enough money for the down payment? And are you aware of the first-time home buying incentives? Before we dive in, just a little bit about myself. I have been a mortgage agent since 2016. During the time, I've encountered various types of mortgages. These experiences have helped me refine my processes and enhance approval rates for my clients. My education was in business accounting. On the personal note, I'm a proud mom, a coffee lover, foodie, and I love to read. So let's get started. So there are 5 steps to home ownership. 1 is pre-approval, 2, make an offer, 3, submit for an approval, 4, satisfy conditions, and 5, closing with the lawyers. We're gonna go in let's break it down each step in details. First step is to do pre-approval, is to meet with your mortgage agent to assess how much you can qualify for. This is what we do at the pre-approval stage. We basically do a discovery call to understand your needs and your goals. Then we get all the required documents like income, ID, down payment, in order to create a customized budget for you. You will know the details of the costs associated with the mortgage in advance, even before you make an offer. We will also do a rate hold for you so you can be protected while you look for your dream property. So the next step is make an offer. Is to work with a real estate agent to start looking for your dream home and make an offer. If you do not have a real estate agent, we have a few that we vetted that we can refer you. Your realtor will go in detail of the finance and inspection condition and any other conditions before submitting an offer. If you are purchasing a condo, this is extremely important that you ensure your lawyer has reviewed the status certificate prior to waiving financing, as well as providing a copy of your mortgage broker to a copy to your mortgage broker and lender. There are items in the status certificate that can affect your financing, such as pending special assessment. You will also make sure you have the the deposit to a seller is available. Typically, when you make an offer, most seller would want like a $5,000 to $20,000 in deposit. It all depends on the seller and also your realtor, and of course you to negotiate. The third step two is to submit for an approval. So after you get an accepted offer, we will submit for an approval. We will go over different lenders that we have, terms and rates special with you before we submit for an approval. Remember, we work with major banks and many mortgage corporations, so we have access to many lender options for you who has different rates special. You basically have more options than if you go straight to the bank, where the bank only has one option, which is them. And then we request a letter of employment and update pay stub because it has to be within 30 days. Most lenders usually take up to 3 to 5 business days to give us an approval. Once we have an approval, they will issue a conditional approval, meaning an approval subject to satisfying conditions that we have. We will then prepare supporting documents to go over the approval and compliance documents before you sign. We will collect any outstanding income down payment document and submit to the lender along with the signed approval. If we need an appraisal, we will order it. It is your responsibility to pay for the appraisal. Once the lender confirms that we are satisfied with all the conditions, your lawyer will take over and prepare the closing with you. As part of the process with the lawyer, you will need to arrange home insurance, and we recommend doing this as soon as possible. You have to provide your deposit to the realtor. You have provided your deposit to the realtor. However, before closing, you will be required to have the remainder of the down payment and any closing costs. This will be given directly to your lawyer in the form that the firm prefers. It can be a certified check or wire transfer, but I've seen most lawyers prefer a certified check or a draft. As you may be pulling from investment, every bank has different policies. We recommend asking the law firm the policy well ahead of closing and prepare your funds. Do not move your down payment from account to account without discussing with your mortgage broker. Prior to closing, you will require to sign with your lawyer. They will review your mortgage documents, the property title, your insurance, and final breakdown of the costs. This likely will happen a few days prior to closing, and is often when they will ask you to bring in the remainder of the down payment and closing costs. So what types of income and documents do you need? If you are salary, guarantee hourly, you need a pay stub, a letter of employment, and a T4. How we look at your salary income is that we look at the annual salary that you are paying. We qualify you based on that, and we just reference to the pay stub and the T4. For part-time, if it's guaranteed, we will need pay stub, letter of employment, 2 years T4. So we will qualify you using the guarantee hours for your part-time. Third is variable income. We will need pay stub. Variable income can be like commission, non-guarantee hourly. We will need a pay stub, letter of employment, 2 years T4. How we qualify you using the income is that we use 2 years average based on the T4. For self-employed, we look at 2 years T1 general, which this T1 general, you can get it from your accountant. 2 years notice of assessment. You can get it on CRA website, or if CRA mails it to you, then you would have a paper copy. Business financial can be business license, right? We don't need financial statements unless if you're buying it in a whole co company. There are different ways to qualify self-employed individuals, but like most banks, they will look at 2 years net income from the business. And we do have other options where we look at 12 months business bank statements minus expenses to determine how much income we can qualify you. So that's a different options for self-employed. How much do I need for a down payment? If you're buying an owner-occupied property, the minimum down payment is 5% of the first 500,000. And then from 500 to 999 is 10%. And then if you're buying over 1 million, it's 20% down payment. Some lender will require more than 20% down payment if the property is over 1.25 million. If you take a look at this chart, so for example, if you're buying a property for 400,000, minimum down payment is 5%, which is 20,000, right? 500 is 25, 600 and is 35. So if it's 600, it'd be 5% of the first 500, which is 25, and 10% of the 100,000. So it'd be 35,000, and then it goes on. What additional expenses will you have? Well, you're going to have a home inspection when you make an offer. And once you get an accepted offer, you're going to have a home inspection. An appraisal, it depends. Not every lender requires an appraisal. Some lender can do auto appraisal. So it depends on the property, how old, location. Legal fees. Legal fees would be, the lawyers, how much the lawyer is going to charge you to close the mortgage. Typically, I've seen like $1,500. Property land transfer tax. If you're a first-time home buyer, you get $4,000 deducted for the land transfer tax. I will, like, when we create a budget for you, we will break down even the property land transfer tax, appraisal, legals, right? Moving expenses, which of course, it costs money to move. Ongoing expenses that can be property tax, mortgage payment. What are assets? So in the mortgage application, we will ask for a list of assets. Your assets essentially make up your net worth. It makes your file stronger when you have a decent amount of net worth. Your down payment will most likely coming from your liquid assets like cash in the bank, RSP, TFSA, or FHSA. And then you can include all your car, anything that you think is worth or something, you can include it in there. How can you increase your down payment? So if you would like to increase your down payment and qualify for more, you can increase your parents can give you a portion of the down payment or the full down payment towards the purchase. And I have seen some parents pulling the equity from the existing home and gifting their kids as a down payment for the next home. So if you have parents who have a lot of equity in their home and they want someone to take a look at that, just let me know. Debts to income comparison. So debt's a major factor when qualifying for a mortgage. The more debts you carry, the less your qualification amount tends to be. Strategically paying off your debts can boost your eligibility for a larger mortgage. Consider this example. So one applicant holds debts such as a vehicle loan, credit card balance, line of credit, and student loan would qualify for $320,000. Where the other applicant doesn't have any debts, will qualify for $435,000. So if you have debts, there's another option as paying off the debts before closing and qualify for that amount. To explore your potential for maximizing your mortgage qualification, it's advisable to engage in like a discussion with a mortgage agent. They can provide you like insights in various options, how to pay down your debts, how to qualify for more mortgage money. Of course, you still need to be able to afford it, right? Your Beacon score. Your goal is to have a 660 Beacon score. This is the average in order to get a mortgage with most lenders. Some lenders will make an exception for lower. If your credit score is not high and you're planning to improve it before you buy, options are you can pay your bills on time, use your low percentage of your available balance credit, maybe 30%. Only apply for credit when you need it. Give it time. The longer your average credit account age, the better. No negative public records such as bankruptcy. Basically, use it or lose it. If you have a credit card, use it and pay for it. What lenders are looking for in an ideal mortgage client? They are looking for stable income, good saving habits, strong credit, buying within the budget, and the property has to be marketable. Determine your purchase price. So when qualifying for a mortgage, we will look at two ratios. One is GDS, which is gross debt service. This is a percentage of your monthly household income that covers your household costs. Based on the stress test, it must not exceed 39% of your income. The second ratio is total debt service. It's your monthly household income that covers your housing costs based on a stress test benchmark rate or stress test rate. And it includes any liabilities like, your debts. It cannot exceed 44% of your income. How to qualify for a high mortgage amount and increase your purchase price. One way, increase your down payment. Two, if you have a co-signer, like your parents who can co-sign, that has income and low debts. And three, buy with a friend or a boyfriend or someone else that you want to live with. Fixed versus variable. You should know the difference between fixed and variable considering what is best for you. Fixed rate offers more stability to your payment. Fixed rate mortgages are best locked in when rates are low. Variable rates can fluctuate, but historically have had more savings. Variable rates have lower penalties. Of course, it's just 3 months penalty. Variable rate holder can lock into a fix after closing with no penalty. Please consider your short and long-term plans when choosing a term. You still have to qualify either you take a variable or fix. And also, like the best way is to talk to your mortgage agent or broker for more advice on that. Here are the first-time home buyer programs that is available. There used to be 4, but now it's just 3. So first one is Home Buyers Plan, RRSP. You can use up to $35,000 of your RSP tax-free as a down payment for your first home. It will be tax-free as long as you pay them back within 15 years. Let's say if you take $35,000, then each year you will pay them back or contribute back $2,333 into your RRSP account over the 15 years. If you do not contribute or pay back the amount in 1 year, CRA will add that into your income for that year, and you'll be paying taxes on that amount. The second one is tax-free first home saving account. This program combines the benefit of RSP and TFSA for new home buyers. Contribution up to $8,000 a year are deducted from your income, saving you on your income tax. When you withdraw maximum $40K, you don't pay tax on the gains. So you can take advantage of this and this together. The last one is first-time home buyer grants. In Ontario, first-time home buyers may be eligible to save up to $4,000 on land transfer tax. Purchase Plus Improvement Program. If you haven't heard about this program is really good if you're buying an older home and you want to do some renovations. If you're trying to find a home within or below your budget, you may come across a home that requires renovations or updates. These programs allow you to roll in the renovation costs into your mortgage and only increase your payment by a few $100s. Some lenders will allow you to do renovations of 20% of the increased value of $100,000. So let's say you 20, let's say you want to buy a home for $400,000. You want to do renovation of $40,000. So we basically get asked you to get a quote from contractor, and then we would do consider the price of the home as $440. That includes the renovations. Then it'd be 5% of that amount. Then we will get a mortgage for the whole thing. I mean, the mortgage from $440 minus the 5% down payment. So here are the lenders that we work with. So like I mentioned, if you go directly to Bank Advisor, they only work for one lender, which is the bank. But if you go through a mortgage agent, mortgage brokers, we also work with the banks and other mortgage company. So basically, like, we see all the rate specials and we see all the lenders' guidelines. Some lenders may not qualify you, but you may qualify another lender. And we use the same credit report, same application to submit to the next lender. You don't have to go, 3 doors down or, to another bank to get this done. It's going to be done by your mortgage agent. So why work with a mortgage agent or mortgage broker? We help homeowners with financing through various lenders and products, not just one bank, like I mentioned earlier. This is what we do for our clients. We review documents and credit reports at pre-approval stage so you can make an offer with confidence. It is very important to be prepared even before you make an offer. We spend time with you to understand your situation and future goals to create a customized budget for you. We help you plan and budget to save for the down payment if you don't plan not to buy right now. Commitment and accountability. We show you how to build wealth in real estate. We start with one and will continue to help you obtain more properties down the road. Well, thank you so much for listening and attending this webinar. I hope you find it useful and resourceful. If you would like to have a consultation of how I can help you plan to buy your first home, please book a call. We are give me a second. So we are give me a second. I'm going to show you. Go back. So we are giving up to $2,500 to one lucky winner for the mortgage payment or rent payment. In order to enter, all you have to do is introduce me to someone who have a conversation with me about their mortgage needs, and I will enter you into the contest. If you have any questions, please, you can email me. You do have my email. And thank you so much for taking the time to watch this webinar. I hope you find it useful. You will receive a replay of the video tomorrow. Like I said, I'm just a phone call away if you have questions. Enjoy the rest of your day.